and get free vouchers.
Hello and welcome. You are watching First Take here on News 9 Live. I'm Krishna Kumar and joining me in the studio is my colleague and friend Amit Ranjan. Amit, very good morning for being with us. We begin by getting a check of how global markets traded over the weekend and how it closed so that we can understand how Indian markets are to open. Indian markets, both the sensex and the Nifty, are expected to open higher because of how Wall Street traded and closed on Friday night, and that is because the Dow, the Nasdaq and the S&P all closing up in the green. In fact, the Nasdaq composite closing up nearly 2%, while the Dow and the S&P were both up each 1% each, and that's because of softer than expected employment data that came from the US. 175,000 jobs were added for the month of April. We're talking about the non-farm payroll data that came in. With those kind of numbers, the expectations was around 240 to 245,000 jobs to be added, but just about 175,000 jobs added. Unemployment in the US rising to 3.9%. All of that meant that the scene was being set for a possible rate cut. In fact, traders on Wall Street expected 2 rate cuts going forward because of how those jobs data in the US came about. And that's the reason why you witnessed Wall Street having a closing sharply up in the green, and also that impacting Asian markets as well. And that means that with a higher than expected close on Wall Street, we can expect a higher than expected close in the sensex and the Nifty. The US 10-year bond yield at 4.49%, dollar index below 106. So these are some of the data that you can keep in mind as we wait for Indian markets to open. Bear in mind, crude also rose. Brent crude at $83.20 per barrel. And if you were to take a look at how Indian markets closed, bear in mind Indian markets closing Friday last week with a bit of profit booking, with a bit of correction. Nifty 50 marginally in the red, 0.15% at 22,442 after touching record highs of over 22,700. Sensex again marginally closing flattish in the green at 0.28%, up above that psychological 74,000 mark, but the Nifty mid cap, small cap all witnessing corrections of over 1% and 1.5%. That's where we closed for trading, and we are 9:45 a.m. in the morning, and you're witnessing the continuation of that. We'll have to wait and watch how well it will go from here on. India's volatility index up above the 15% mark. We have Avni Bhatt, Senior Vice President at JM Financial, now joining us on First Take. Avni, very good morning. Thank you so much for taking time out to be with us. Indian markets expected to open in the green, open up in the green thanks to what happened on Wall Street on Friday as it closed sharply up. But how do you read these numbers on the screen?
Good morning, everyone, and a very good morning to all the viewers as well. What we are looking on the index front is actually volatility, nothing else. As far as the levels are concerned, I think 22,400 is a very important, a very crucial level, because that's about 38.2% retracement level of the up move from 21,778 low to the high of 22,784 that we saw in last week. So as long as Nifty closes about 22,400, I think there will be attempts of pullback on the upside up to the region of 22,700 to 800, which is a very, very crucial resistance. And that resistance has moved lower from 23,000 to the range of 22,700, 800. So it's going to be difficult for Nifty to sustain at those levels. And on the downside, if at all 22,400 is breached, then we are looking at a scenario where Nifty may move in a very quick move will be seen on Nifty up to 22,200 on the downside. And similarly on Bank Nifty, it's weaker of the two indices. 23.6% retracement level is somewhere around 48,580, which is the immediate support for Bank Nifty. So that's where I think we are expecting Bank Nifty to move towards. And from around those levels, we may see pullbacks. So there will be instances of pullbacks and sell-offs. But more or less, the range is going to be intact. And the important key highlight is going to be the India VIX. Now it's the pre-election time. So India VIX is expected to move up to in the range of around 18 to 19%, irrespective of the direction of the market.
All right, and with that, it's time to put the focus, Amit, isn't it, on the earnings that have come out, possibly impacting stocks and the Nifty as well. Important set of earnings. You have Kotak Mahindra Bank's earnings as well as Titan as well.
I'll start with Titan. Krishna, good morning. Avni. Now, Titan reported their earnings and they were, as per the market expectations, the revenue rose 17.5%, 18% was what the market was expecting. The net profits rose 7%. But the stock price today is down almost 2.46%. Avni, what explains that?
So Amit, what I understand purely based on the options data in the charts, I think today's down move that is there, it may continue up to around 3,300. But today is a very good opportunity to start accumulating the stock. 3,300 is the support level. So from current levels to 3,300, we can accumulate the stock and keep a stop loss of 3,160 on the downside and target around 3,800 on the upside in a very short time.
Do you expect a rally? Because if I look at all the peers of Titan, and Titan growth has basically been driven by the jewelry segment, but jewelry stocks are not really doing well over the last 1 week. What do you make of this? Do you still see the dip is going to continue for some time, as you say, or is it going to basically be a longer dip because of the jewelry segment not doing really well in the recent time?
So the view is that dip may probably hold somewhere around 3,300. It may consolidate for a very long time around those levels. I don't expect a further dip below 3,300. So around 3,300, it may consolidate for a very long time. It may take some time to move up, but I think support should hold.
Okay. The other big one that announced their results is Kotak Mahindra Bank. Their profits went up 18%. Their net interest income went up 13%. But looking at the banking segment, Kotak has been quite a laggard over the last 1 year. Where do you expect the Kotak script to be going from here? They have reported good profits and good net interest incomes also.
See, I think the recent low that has been made on Kotak Bank around 1543, that level is, I think the stock has bottomed out around those levels. Again, this stock also may take a very long time to come up, but the support is in place, and this is a stock that one can, start doing an SIP in. You need to have a perspective of around 8 months to 1 year for the stock to rebound. It's not going to be a trading call wherein you see a quick move of 5 to 6%. So it's a stock to accumulate in the portfolio. Supports are in place, but it's going to take time for the stock to recover.
Avni, one more stock I'll pick your brains on, 8 to 10 months on Kotak, is Britannia Industries. Now, they have reported a marginal increase in revenue of about little over 1%, net profits up 3.76%, EBITDA up, EBITDA is down actually. FMCG has been quite a laggard sector over the last 1 year. Is it a time to buy on the lows for Britannia, or just wait and watch?
So Amit, I think we had discussed the FMCG sector some 2-3 weeks back also, that there are no major fireworks in this particular sector. And even for Britannia, doesn't look like it's going to give you any major returns from current levels. One can buy at current levels because again for this stock too, the support is in place, but it's not going to move up immediately. And as an alternative, I think ITC is better placed to touch its all-time high levels and move back to around 480-500 range. So given a choice, I would replace ITC. I would replace Britannia with ITC.
All right, replace Britannia with ITC is the word coming in from Avni. But Avni, with that, it's time to understand what are your picks, what are your stock calls for today's trading session. Give us your top 5.
So today, since the markets are going to be volatile, it has opened with a gap opening. So all these stocks that I mentioned today, one can buy at the current levels, but keep some room for a dip of around 2 to 3% from here. So we can buy in 2 tranches. Okay. My first pick is going to be from the auto sector, which is Maruti. Maruti has had moved up quite a bit, and then after seeing the correction in last 1 week to 10 days, I think the stock has retraced back. The required retracement is done. So one can accumulate in the range of 12,500 to 400. And the target for the stock is 13,000. And the positional target is 13,400. Trading target would be 13,000. One can keep a stop loss of 12,100. The second stock is SAIL from the middle space. So SAIL also one can accumulate in the range of 163 to 167. And the target for the stock in this month itself is somewhere around 188, and stop loss can be kept at 157. The other stock is Bharat Electronics. One can buy in the range of 230 to 234. The target on the upside is 252, and the stop loss can be kept at 225. And the last pick would be Petronet LNG. One can accumulate in the range of 310 to 313. And it has formed a very good base around 300 levels, and the stop loss can be kept at 302. The upside target is 330.
All right, so those are the stock picks of Avni Bhatt, Senior Vice President, JM Financial. Avni, thank you so much for taking time out to be with us and sharing your picks for the day and helping us understand the levels for the sensex, Nifty and the markets as well. And with that, we will let you go. Thank you so much for taking time out to be with us. And with that, it's time for a short breather here on First Take. We'll be back with more market action on the other side. Keep it with News 9 Live.
The football is mother of all games.
It is a team sport.
The leadership attitude is taking the ownership.
It's always a big responsibility to take decisions and the right decisions.
I always question the stereotypical.
And that's why you are in that position.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When we look at audio in general, we had music, which is like extremely old format, and then we had podcasts.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
The lab-grown diamonds are not mined and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allow them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News 9 Plus. Download now.
You're watching First Take. I'm Krishna Kumar. We are getting a check of how Indian markets have opened this morning. Sensex and the Nifty marginally in the green. If you can pull that up, we'll tell you how it's going. Bear in mind, Indian markets tracking the gains on Wall Street. Wall Street closing up in the green on Friday. There you go, Nifty 50 marginally in the green at 22,493. Sensex up 0.3% nearly at over the psychological 74,000 mark. However, the Nifty mid cap and the small cap both continuing to trade in the red, with the volatility index at 13.4%. To help put the day's market action into perspective, we have Gaurang Shah, Senior Vice President, Geojit Financial, now joining us on this broadcast. Gaurang, thank you so much for taking time out to be with us. I'm going to begin by asking, there was an expectation that the Indian markets are going to have a good day today because of how Wall Street closed based on those softer than expected US jobs report, and that triggered again speculation that there could be rate cut or even rate cuts from the US Federal Reserve going forward. How do you read the signs on the street at this point, Gaurang?
Thank you very much for having me on the show, and morning to all of you also. Other than the Fed chair, everybody else is speaking about the timeline and the quantum of rate cut in the US. I think it is very clearly said in the comments by the Fed chair last time that everything will depend upon data, and if the data indicates accordingly, the Fed chair is going to act in terms of rate cuts or status quo or otherwise. So I think rather than jumping the gun, let the Fed chair decide upon its wisdom and thinking as to when they will cut the rates. Let us not be the Fed chair and start jumping over. And honestly speaking, I think, from last year itself, this is known to us. I don't think that Indian markets are going to react majorly, whichever way the Fed chair is going to decide. We have done and dusted and discounted that particular event. So, and for me, I think for us, it would be more prudent to look at what RBI and the MPC have to say, and what is the overall view as far as the rate cuts in India is concerned, rather than worrying about what US and the Fed chair is going to do. Having said that, last week we were in the discussion with Suyesh this Monday morning itself last week, and we had expressed that we are witnessing a little bit of fatigue on the screen, expect a little pullback, and that's what exactly happened throughout the week. Last week it was range-bound trade. On Friday we made an all-time high and then a sell-off which got aggravated. But the good part is that the sell-off was nothing big to speak about. It was less than 1% correction on the Sensex and Nifty. We expect similar kind of trend this week, but it is going to be more stock specific on the Q4 earnings unfolding.
All right, so you're saying that what's going to happen in the markets right now is going to be stock specific based on earnings. And talking about earnings, Amit, let's begin with Godrej Consumer. What say?
Godrej Consumer is likely to announce their earnings today. Gaurang, I'll take two Godrej companies. Godrej Consumer has been an outperformer in the pack. They've done better than Dabur, Emami, even Bajaj Consumer. The stock is marginally up, though last 5 days it has been up. Is it because of the bifurcation, or is it really that the stock is doing well on itself?
So I think pipes of peace have been smoked and the resolution is in place as far as the difference of opinion, I will put it that way, between the stakeholders, and resolution coming through is not only good for the future of the company and its employee, but also for the stakeholders. Having said that, since we are speaking about Godrej Consumer Products, I think it will be prudent on my part to give a disclosure that we have a fundamental coverage as far as Godrej Consumer Products are concerned. And the entire FMCG basket, we believe that post the election is done and dusted and the government in place post 5th of June, I think you are going to see a lot of policies unfold, especially for semi-urban, rural India, agri-related activities, which will push the demand for the, which will push the income level for this part of India. And I think that's where you will see a huge amount of support coming in terms of volume growth. And input cost, which was a concern, is also a thing of the past. So I think not only for Godrej Consumer, but all those companies which are in that Godrej Group universe, I think it's good sign for all those companies.
Talking about the Godrej universe, now Godrej Properties has announced that it is going to launch projects worth 30,000 crores to achieve 20% growth in sales bookings over the next 1 year. Their stock has gone up almost 7%, is almost 7% today. What do you make of Godrej Properties? A rally round the corner?
Well, I think that, well, on the fundamental side, Amit, honestly, we have coverage over there. We had a buy coverage earlier, but now with the target price in place and the kind of rally that you rightly mentioned on the counter, not only on Godrej, you look at the strong names as far as the real estate sector is concerned. Be it Godrej Properties, be it DLF, be it Oberoi Realty, be it Shobha Limited, or be it any other name, established player I'm talking about. You've seen a good rally. So, on Godrej Properties, we have a reduced stroke book profits recommendation, given the kind of price levels that we are witnessing. And yes, you are absolutely right. I think this particular announcement is by and large in a large city like Mumbai, if I'm not mistaken. And in and around the central suburban India, suburban Mumbai, there are a lot of projects that Godrej Property is going to execute and possibly put up for sale in the next year or two. I expect the entire real estate pack to do well, but on Godrej Properties, we have a book profit stroke reduced recommendation.
Another company I would like to pick your brains on, sector itself, CG Power. Now, they have been making big moves, but the stock itself is down today. They're due to announce their results today. Their stock over the last 1 year has done pretty well at 75% gains. Today it is down. What do you make of this sector and CG Power itself? They are going into new sectors as they have announced over the last few months.
I think you are picking all those names which we have a sell recommendation now, Amit. We had a buy recommendation on CG Power and Industrial, but since our target is in place, I think it's prudent to take some money off the table. And remember one thing, Amit, I think chasing your profits without any limits is going to turn out to be very dangerous in terms of, expecting more and more. As you rightly mentioned, in the last 6 months or 3 to 6 months, the stock has rallied to a great extent on fallback of the announcement that we've seen in terms of the opportunity that lies ahead for a company like CG Power. But we absolutely believe that the capital goods engineering electronics segment is going to do well. But there is going to be limitation in terms of earnings and pricing. So we believe that on fallback of earnings, it is fully priced. We have a sell recommendation on CG Power currently.
All right. So sell recommendation on CG Power is the word coming in from Gaurang Shah. Gaurang, we're going to keep it stock specific as you've been talking about. We finished up all the earnings over here and the earnings to come out. Let's talk about a stock like Paytm. Huge management reshuffle. The COO resigning, citing personal reasons, but will be looking to stay on in an advisory capacity. But meanwhile, new CEO appointment for Paytm Money, new appointments. There is a lot of churn that's going on with Paytm. How do you see the stock? There you go, Bhavesh Gupta stepping on as COO. He's going to transition into an advisory role. Meanwhile, Rakesh Singh takes over as well. All of this happening starting from the 31st of May, which means that by the end of this month, we'll have a brand new management in place for Paytm Money and the financial services business as well. I want to understand, how do you view the stock from here on?
Well, so I think on Paytm also we have a reduced recommendation, to be very honest. And this reduced recommendation came in last year, somewhere November. We had given a reduced recommendation, and I think earlier this year, some couple of months back, we had the news flow in terms of the action that was taken by Reserve Bank of India. Post that, the history is known to all of us. And then, of course, the news flow in terms of high-level resignations coming in. We don't have clarity in terms of what business model the company is going to follow. I think, when you have a stock or a company which is surrounded by news flows on the negative side, it is always prudent to look at other alternative ideas. Currently, we have a reduced recommendation as far as Paytm is concerned.
All right, that's the word coming in on Paytm from Gaurang Shah. Gaurang, stay with us. So we're taking a short breather over here. We'll be back with lots more on the other side.
Luxury is now becoming a need rather than something that you aspire to be. So that is adding a lot of fuel. Obviously, government has played a vital role in it.
In a city like Mumbai, a luxury home may be something upwards of rupees 10 crores. In city like Delhi, again maybe something upwards of 8-9 crores. But in Bangalore, we typically define a luxury home anything which is upwards of about 3 crores.
It's a combination of increased wealth, availability of more luxurious homes, and simultaneously the overall economy doing better.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
You are watching First Take. I'm Krishna Kumar, and with us on the broadcast is Gaurang Shah, Senior Vice President, Geojit Financial. Gaurang, at this stage, I want to help the viewers understand what the markets are going to be like going forward, because bear in mind, in less than a month's time from now, the results of the ongoing elections, general elections in India, will be out on the 4th of June. There's also talk of a post-poll correction, which is a possibility. You've already been talking about how there is some wariness, some tiredness on the screens already, and all the cues for the next few weeks are going to be stock specific. But help put the markets into perspective. How is a retail investor supposed to approach markets the way Sensex and Nifty are trading at this point in time?
Well, honestly, I think the way VIX is behaving since last week, 10 days, is giving you indication as to what you can expect from the markets. Historically speaking, month of May has been a May wherein you see a lot of choppiness, volatility, and by and large a downward move. We have approached the month of May with a big event, and that is second largest phase of election post independent India. Along with that, we have Q4 earnings unfolding, and along with that, you have a little bit of uncertainty as far as the Middle East situation is concerned and its impact on the crude oil prices. We have given a broad range for this week, if you ask me, 22,350, 22,450 on the lower side, 22,650, 22,750 on the higher side. And like I mentioned last week, when I was in conversation with Amit and Suyash on this very show, I had mentioned that it will be prudent to expect a little bit of pullback given the kind of elevated levels that we've seen. And not surprising, after last week, Friday, all-time new high, we've seen a pullback. This can possibly be the order of the day and for the week. Political news flow and comments from various political parties and leaders would be in the spotlight, and markets would react accordingly depending upon which way the comments are. But one has to prepare to fasten the seat belts and expect some choppiness and volatility. I think if you see a decent correction on the downside, not really large enough, but consolidation and range-bound downward move, then post-election expect a little bit of positivity. Not to forget, you will possibly have the full-fledged budget also unfolding. That's what the Honorable Finance Minister and the Prime Minister have mentioned, which might act as a tailwind positive for the markets.
Gaurang, I'd like
long-term damage which is going to be irreparable. It's short to medium term, you can expect some impact and volatility.
Short to medium term, we can expect volatility. But sharing your wisdom and knowledge with us. And with that, we've completely run out of time here on this edition of First Take. Thank you so much for watching. We're taking a short break at this stage. We'll be back with World Business Report on the other side.
Current Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
The lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people